Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, December 9th, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, I have a very quiet overnight session here, just 9 handles of range, 9 points. That is 33% of average daily range. It's been averaging about 27.25 points over the last 10 days, but over the last 5 days, last week, it averaged 38.65 points per day. So this is a 10-day, 5-day average. Clearly, volatility is increasing or had increased up to this point, but right now we're at 9 points. 9 points, and this Wednesday is another Fed FOMC meeting and the Fed interest rate decision. So we're going to get ourselves another FOMC key level. The last time we saw one, it went bid, and we still have not come back to it yet. Very strong reaction to it. We have seen strength into the FOMC, which is what we've seen here recently. We've seen a lot of strength heading into the event, followed by a bit of sideways as the market awaits the news. So we could see a rather quiet start to the week. I think if price goes too far one way, say too far up, it may get pushed back down. If price goes too far down, it may get pushed back up. And we might kind of hang around in this zone here heading into the FOMC meeting this Wednesday. However, once that comes and goes, there could be another dose of volatility here coming for another week or so, and we could see further upside behavior here as this market remains in an uptrending structure that has yet to be violated. Now again, we have a great clear LVN right here. That's the recent pivot low. That's your major structure low right now. So if price were to drop into that zone, it could still be a buy for bulls, as perhaps price trades the range throughout the month. But a failure to hold that 30.60 or 30.50 would be significant and could open up a return back toward the 200 or perhaps lower. Right now, everything's trending up, and everything kind of depends on that 30.50 level. All right, let's take a look here at the NQ. You'll see here again, very quiet session right there. 36% of ADR right now at 34.5 points current. It's been averaging about 95 points on a 10-day basis, but on a 5-day basis, it was 123.5. So is definitely increasing here over the last week, but with FOMC coming up, it could be rather quiet as it is right now. Again, the uptrending structure remains firmly intact, and we still have a little bit more to go before we take out that high, 8,500, very, very close. But if we fail to hold this zone right there, that LVN, that's the important one. That LVN right there is very significant. Let's get a level on it. It is about 81.50. You know, if the price fails to hold 81.50, that's when things likely return back toward the 200, somewhere in the zone between 77 and 7,800. But right now, even if price were to reject up here, it likely swings back here. This could be a great opportunity to swing it back. That would be a great way to finish out the year here, maintaining market structure and providing some good buyable dips for a continuation higher. So right now, everything suggests more upside behavior unless that 81.50 is taken out. All right, let's take a look at crude oil. You'll notice here with crude oil that price has mostly been trending up here. We had a deep pullback, but the deep pullbacks have been few and far between lately. Ever since these lows down here off the 51s, that was a strong reversal, and since then it has held here at 54, and every pullback, whether it's been a 1-day pullback or a 2-day pullback or a week-long pullback, has been bought to new highs afterward. That's saying a lot right now. And although price has not really established a whole lot of acceptance above 58 or 59, which is very important here, and it hadn't been able to do that for a while, it hasn't also been rejected very significantly yet either. It's still trading within this range that continues to develop here, right around the key range mid. I mean, this is a lot of built up energy here. At some point that release will come. Right now things are still trending up, but given the rejection we're seeing here at the top end of the range, do we now pull back a bit to the bottom of the channel? Are we going to see a move, say, back to 56.83, which is an FOMC key level? Are we going to see a return back to the pivot range near 56s? So right now, with the early rejection that we're seeing off the previous month's high and the top of the channel here, perhaps we see a little bit of a rotation that can bring us back into the zone. again, everything has been buyable so far until proven otherwise. All right, let's take a look lastly at, let's go with GC here. Here's gold. You'll notice with gold that this thing has continued to form lower highs time and time again. Even each of these were a bit lower than the last. But it hasn't really given up that LVN yet. It's eaten through that 1460, 1465. It's gotten as low as 1440. We knew that FOMC key level could be in play. It had just missed it, got just shy of that level. But now there's the previous low of the month here and that level. And you know, if price were to come into this zone again, there's a big LVN there, 200's coming up. Perhaps that can provide a liftoff. I think it has had built enough energy here to where if it breaks out in either direction now, it could be significant. At some point, I think ultimately we may see an upside push, but the market has been quite strong overall, so it's been range bound. At some point, just like we saw in May there, where we had that late May breakout, at some point we're going to see that move, and it's going to be significant. We're coming up to that point. It may not be now, but at some point we're going to see it, and that's when we may see the thing flag higher again. Again, 1440 down to this that 200-day, that LVN right in that zone, could provide a great buy with a long-term focus at an upside break. Right now, kind of range bound and coming back off of the recent highs. I think short-term for the week, this level right here is very important. That's the previous month's close. Going bid here, then coming back down below it, holding. So if it stays below there, or even stays below 1475 in general, there may be more near-term downside. So we'll keep that in mind. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, happy Monday, and I'll see you in the trading room. Take care.